licenses, the promoters can increase their stake in banks to 26% or maintain it at 26%. The earlier cap was 15%. There will be an active push for NBFCs, large NBFCs over 50,000 crore AUMs to be converted into banks, even if they are owned by corporate groups. These are some of the seminal changes recommended by an internal working group of the Reserve Bank. This can change the terrain of banking, especially if conglomerates and their NBFCs are given banking licenses. What is the reasonable expectation as to when this can all happen? And will these recommendations definitely become regulations? Or are these recommendations likely to fall by the wayside as they did on previous occasions? For all these questions, we have with us an eminent panel. N.S. Vishwanathan, former Deputy Governor, Reserve Bank of India. S.S. Mundra, also former Deputy Governor and a commercial banker with 4 decades of experience. And Sanjay Nair, CEO and country head, KKR India, again, a 4-decade veteran of banking in India. Gentlemen, good morning and thank you very much for joining us. Mr. Vishwanathan, if I may start with you, sir. You know, this recommendation that conglomerates should get bank licenses had come earlier during the Subbarao regime as well. But ultimately, Bimal Jalan did not give many of them licenses, although they applied. Do you think now that RBI has come, an RBI panel has recommended a second time, there are chances this time that it could go through?
So, I think I'll put it this way, that the fact that the terms of reference of this internal working group specifically included this issue of whether industrial houses should be made eligible for banking license or not. Obviously shows that there isn't a global standard on this, and therefore it's not that you can say this is the rule across the globe and so I want to do it. So it's a question of whether it's the right to do for India. Is it the right time to do for India? And if it is the right time, how to do it and what are the basic principles that one need to adopt to take it forward. So since you referred to the earlier licensing of 2013, that did allow, but ultimately the process resulted in only 2 applicants being recommended by the High Power External Advisory Committee. Both of them were from the financial sector anyway. Subsequently, the Reserve Bank made it more clear, both in the Small Finance Bank window licensing and subsequently in the on-tap licensing universal conference banks, that industrial houses will not be eligible. Okay. So that is how it came. And there were a lot of thoughts within and outside. Why shouldn't they be allowed? Isn't that a possible source for capital for setting up banks in India? Are we shutting off prospective good licensees by shutting off this? So there were these kind of debates internally, which is why RBI included this, possibly included this as for the terms of reference of the committee.
Okay, but still I would like a more direct answer if Mr. Mundra can give that, sir. Do you think, and as Mr. Vishwanathan said, this was part of the terms of reference of the committee, so do you think there is a greater buy-in now from both RBI and government, and therefore more chances of it getting accepted?
Number one, yes, I think while it was a terms of reference, and obviously if a specific terms of reference is coming, probably in some way it is indicative of a current thinking going on, or some level of acceptance might be possible. It could be like this. But let's understand, it is only an internal working group report. It would need, of course, the consultation is all right, but it will also need buy-in from some of the, other agencies and particularly government. So if I look at the way it is worded in the recommendation, I would put it this way. Probably it allows a foot in the door, but to my mind, it would be a long way before one can really enter into the room or cross that threshold. Because, the requirement is the required amendment in Banking Regulation Act, which would need the action on the part of government. But even within RBI, it has mentioned that when the supervision bandwidth is much more enhanced, and beyond that, the consolidated supervision.
Okay.
Now, when you are talking about the conglomerate and you are talking about the consolidated supervision, it means the other regulators, SEBI, IRDA, they also have to come on the board. A model has to emerge. So as I said, maybe it gives an indication that there could be a preparedness provided enabling ecosystem is available.
Okay.
On the top of that, Lata, I am slightly confused by the immediately following recommendation. Because in immediately following recommendation, you say that NBFCs plus 50,000, even if owned by the corporate houses, can be considered.
Exactly.
Now, if they can be considered, then whatever apprehensions are there in the first case, they are equally applicable in the next case also.
Okay.
So do you mean you need then BR amendment and the consolidated supervision before the NBFCs can also be considered?
Absolutely.
If that is the case, there was no need to distinguish these as two separate recommendations. So to be frank with you, I am slightly confused on this. And if idea is that you exclude all those NBFCs till those enabling systems are put in place, then I think whatever we are left with would probably again be a difficult, to say. That there would be many eligible candidates.
Yeah,
so as an opening remark, this is my take.
No, I agree with you. So even that confused me, and that would have been my next question to you. That most of the NBFCs who are eligible for bank licenses are parts of conglomerates.
Yeah,
so unless that overall problem is resolved or legislation passed, it would be difficult. But Sanjay, there is another issue.
But Lata, by the way, of course, we will be in the conversation, but there are quite a few confusions on some other recommendations also. It's not only the only point of confusion.
All right.
But anyway, we'll take it when it comes to it.
Yeah, I'll just come to you. These are opening remarks. Sanjay, I wanted to ask you more particularly about payment banks. Already payment bank licenses are with many large corporates, including the largest of them, Reliance. Do you think even they can be converted into a SFB without the legislative changes? Or do you think that can happen earlier?
Yeah, I mean, look, it can. I don't think that is the biggest impact of this internal working group report. That probably can happen. Again, you're in a mishmash of the conglomerate. I think the biggest driver here has to be the increased credit in the country if you want to get to these lofty aims of GDP growth and GDP size. I think that should be a single point driver. And therefore, I think the number one priority, according to me, is one lead regulator, which in this case is RBI. For the 2 or 3 very large NBFCs, they need to be tightened on regulations and they need to be given freedom to quickly become banks. Otherwise, you're running 2 big risks. One, that they're penetrating a lot and they're doing a fantastic job of a private mindset of risk management and risk taking, but they will need deposits and they will need a much more sustainable business model. So I would say that's an absolute number one priority. The number 2 priority is the lead regulator should equip itself with the supervision capacity, at least start by regulating these complex, very large, very distributed NBFCs. So I think the 2 most important steps, if you break down this whole internal working group, start with just this. Now, if they're a part of a conglomerate, and if you're going to consult every regulator, it's never going to happen. I just think here's a time to take some leadership here by the lead regulator. And if it's, I don't know which companies will apply for it, but obviously the 2, 3 big ones, they have to get equipped to become banking. They will have to face tighter regulation. And I think they should continue to grow. You need retail credit growth. I'm a little worried about SME and MSME, but we'll talk of that later.
All right.
But I think that's it, simple. From my point of view, if you just cut to the chase, these are the 2 big things you should start with.
This is throwing more questions on my plate. Mr. Vishwanathan, I don't know how to sequence this. First, let me ask about supervisory technology to supervise. Do you think that we are on the threshold where we can use big data and a whole host of data available in the public domain to improve RBI's supervision? Are we on the threshold of a seminal improvement in supervision?
Yeah, I think I just want to make a comment or two on the earlier question, because in the concept of what Mr. Mundrasan come to this question as well. See, I think I want to make what I said very clear, that there isn't a standard, global standards. Obviously, the RBI wanted to know what are the arguments for and against industry house being given a license. Because if you look at, there hasn't been 2013, then subsequently RBI said no. Just as except that there are some major jurisdictions which do not allow.
Yeah.
There are some which are. Okay. There is very. The logic is that you do not want to mingle the commercial business with the banking industry activity.
Yes.
Okay. Now, the point to note is that the issue is not therefore whether there's a proper argument for continuing the current practice, proper argument for not continuing this current practice. And if you ask me, my personal view on this is that there hasn't been any major argument in the report to say why this current stance has to be changed.
Okay.
So that is one of the points I want to make.
Yeah.
And two, I think I fully agree with Mr. Mundra that see, today NBFC is allowed to become bank anyway. That is part of the on-tap licensing. Okay. So the reference to the NBFC, large NBFCs held by industrial houses being given a license prior to other things being done, I think that's something one must be worried about. And if you remove that, then there's nothing about that, because any NBFC can anyway apply for converting in bank, and if they are fit and proper, they'll be eligible.
Yeah.
So I think I wouldn't, if you ask me, first the RBI should examine whether it wants to give it to industrial house at all. But in any case, without all the process being completed, allowing existing large NBFCs held by industrial houses to become banks, I think that may be
that step should not be taken. And
I think that I don't think it's the right thing to do. Okay. Now coming to the question that you asked, obviously Reserve Bank has today a lot more statistical capabilities, data mining capabilities, data availability with RBI, and therefore this the entire AQR, which of course Mr. Mundra himself championed when he was the DG RBI and supervision, was facilitated because we had more data than we had earlier.
yes.
Which really data. So I think the way forward in terms of improving the quality of supervision is to have data, big data, have analysis done well before you go, and then validate it or find what is going wrong or right at the bank through the.
Okay, what I'm asking is, can it be really, more reasonably foolproof? I think it's never foolproof. But, now the MCA has data. What do we need when we have to give conglomerates licenses or people with commercial interest licenses? We want to know who are the connected entities. And very often you don't know. Do you think we are at a stage where we can get MCA data, ROC, Registrar of Companies data, SEBI's data, exchanges data? Are we able to identify connected entities?
I'm not too sure. So we still have, because if you look at, there have been many ways, these some of these regulations have got circumvented. So we must. So when the committee has said the supervisory capability of RBI has to be improved, okay, to the level that it can regulate this, supervise this activity, I think we need to get to what exactly that turns out. Is it just purely a conglomerate? Is it looking at purely the spirit? Is it the letter? Okay, so because you can always have, as I said today, if you look at Section 2020A of the BR Act, it talks about directors. Okay, now you can have directors who are not connected with the shareholders.
Okay,
and still can and so that is one of the areas that you need to amend.
Yes.
Okay, and then finding those interlinkages through, if it is done through a chain of entities,
Yes.
But whether it's possible to do at all is something that one has to be
Cognizant.
one has to really see that that's possible.
Okay.
So if you want to really go down this route, the data capability, the enforcement capability, if you ask me, analysis and enforcement capability has to be,
Vastly upgraded.
Vastly improved.
Okay.
The RBI level.
All right.
To take.
Okay. So I have to take a break. I have lots more questions. We are